Insperity released its earnings for 2020 Q3. Better than expected result was announced. The double-digit 13% growth in adjusted EBITDA was better than anticipated when the pandemic first hit. The effects of the pandemic on Insperity ran the full gamut from obvious expected negative to unexpected positive. Total revenue for 2020 Q3 was $1,008 million, a 3.4% decrease from the $1,043 million in 2019 Q3, driven by a few factors. First, there was a 3.8% year-over-year decline in average paid worksite employees, WSE, driven by layoffs in its client base during the pandemic. This decline is more than offset by the increase in average pricing of 4.4% year-over-year, which indicates Insperity's pricing power to pass on higher benefit costs compared to previous year to its clients. However, some recognition of revenue by Insperity was delayed due to deferment of payroll taxes due to the FICA deferral program instituted as part of the Coronavirus Aid, Relief, and Economic Security Act, in short the CARES Act. The average number of worksite employees paid per month in 2020 Q3 was 231,750, a 1.7% increase from 227,894 in 2020 Q2, which was above the high end of their expected range, but still 3.8% lower than the 240,939 a year ago in 2019 Q3. This increase compared to the previous quarter was driven by 1. Worksite employees hired or returning to work outpacing layoffs. 2. Client retention for both 2020 Q2 and Q3 remaining at its historical level of 99%. And 3. The addition of worksite employees from solid new client sales throughout the pandemic. Insperity's effective support of its clients to quickly take advantage of the CARES Act, and specifically the Paycheck Protection Program, also helped with mitigating some level of layoffs among its clients. The management expected that paid worksite employees to return to near pre-pandemic levels by the end of the year. Gross profit was $185.0 million, an 8% increase from $170.5 million in 2019 Q3, as a result from higher than anticipated paid worksite employees and pricing, combined with significant favorable results in benefits and workers' compensation costs. Insperity entered 2020 with certain pricing targets set prior to the outset of the pandemic and continued to manage toward these budgeted targets. Lower than expected benefit costs were primarily associated with favorable claims development from less healthcare utilization during the pandemic. However, going forward, they expected further normalization of healthcare utilization with the resumption of some deferred care and COVID-19 testing and treatment costs. Lower workers' compensation costs were attributable to the effective management of claims incurred in periods prior to the pandemic. Operating expenses increased from $135.8 million in 2019 Q3 to $156.3 million in 2020 Q3, or a 15% increase, including a cost associated with a 10% increase in the number of trained business performance advisors, BPA. A majority of the 15% increase in operating expenses was due to increased stock-based compensation costs, driven by 1. The recent outperformance in the level of paid worksite employees and earnings. 2. The shift in the weighting to performance stock awards from a performance cash awards for 2020 to further align employees' interests with shareholders during these challenging times. 3. The acceleration of expense for employees meeting retirement eligibility requirements under recent modifications to their plan. And 4. A comparison to prior year's quarter in which earnings and related to performance-based compensation were adversely impacted by large healthcare claim activity. Excluding stock-based compensation and depreciation and amortization, operating expenses increased by 4.6% over 2019 Q3. Despite an increased workload from the pandemic, Insperity has held other corporate headcount flat and achieved cost savings in other areas, including travel, training, and other general and administrative costs. Adjusted earning before interest, tax, depreciation and amortization, EBITDA, was $57.6 million, a 12.5% increase from 2019 Q3. As a reminder, Insperity's adjusted EBITDA is EBITDA plus non-cash stock-based compensation. Net income was $20.0 million in 2020 Q3, a 22.6% or a $5.9 million decrease from $25.9 million in 2019 Q3. This is mainly due to the increase in gross profit of $14.5 million, offset by the large increase in share-based compensation of $14.3 million and some other increases in operating expenses. Diluted earning per share, EPS, was 51 cents in 2020 Q3, a 19% decrease from 63 cents in 2019 Q3. Adjusted EPS was 91 cents in 2020 Q3, a 21.3% increase from 75 cents in 2019 Q3. Adjusted EPS is diluted EPS excluding non-cash stock-based compensation. On the balance sheet, at the end of September 2020, adjusted cash increased to $213 million from $107 million at the end of December 2019, with an additional $130 million available under their $500 million credit facility. On cash outlays in the first 9 months of 2020, cash was spent on shares repurchase of 1.34 million shares, that is around 3% of its outstanding shares, for $91.2 million, that is $68.20 per share on average, dividends payout of $46.5 million, and capital expenditures of $68.8 million. The board of directors has authorized an expansion of its stock repurchase program by an additional 1 million shares, and as a result will have approximately 1.2 million shares available for repurchase, which is around 3% of its outstanding shares. The effects of the COVID-19 shutdown highlighted a specific advantage in Insperity's business model, which we have discussed before, which is its client selection strategy, where it targets the best, small and medium-sized businesses across a wide range of industries, instead of all businesses regardless of their quality or risks. Due to such risk-based client selection process, Insperity had a very small percentage of its client base in industries most affected by the pandemic and shutdown such as entertainment, hospitality, travel, and restaurants, and also with no significant increase in business failures among its clients. On guidance, there are many factors to be considered, including the pandemic condition, the trajectory of the economy, the political environment and the timing and details of government stimulus. If the pandemic intensifies, their direct cost may be below their historical trends as they experienced this year, but growth may be negatively impacted. On the other hand, if the pandemic is mitigated or under control, direct cost may be elevated, but growth may accelerate as an offset. Therefore, this is uncertain and hard to predict. However, one thing that Paul Sarvati, the CEO and founder of Insperity, could be certain was the competency of his team and organization, where he mentioned, "We have an amazing organization with the necessary curiosity and brainpower to provide the agility and capability to manage through a crisis and come out with impressive results for shareholders, clients, and other stakeholders." This year, we have demonstrated the depth and breadth of our competence and level of care for our clients to execute on matters within our control, along with an inspiring ingenuity and resourcefulness to respond to unexpected events. For the rest of 2020, the management continued to expect sequential worksite employees growth over the remainder of the year. For 2020 Q4, they forecasted average paid worksite employees to increase by 2 to 3% over 2020 Q3. With improved outlook for 2020 Q4 worksite employees growth, their pricing strength, and expectations of increase in their direct cost programs compared to this quarter, they forecasted 2020 Q4 adjusted EBITDA of $21 million to $30 million and adjusted EPS of 20 cents to 38 cents, much lower than the adjusted EPS of 91 cents for this quarter, 2020 Q3. Join our investment forum at Facebook. Link in the description below. Check out some of our in-depth company research at moneywisesmart.com/multibagger research. Link in the description below.